All right, let's go over what we're looking for. So this morning, we've been in an uptrend since, let's go all the way back. Let's go to yesterday first, and then we'll go to today's trading. I'm going to show you exactly how we like to do this. So yesterday, it says V bottoms with dual trend filter. So filter wrong. V bottoms with dual trend filter. 1 second. Here we go. V bottoms with dual trend filter. Liquidity grabs occur after the V bottom for the LG2 strategy entry. What does that mean? All right. So what does V bottoms with dual trend filter mean? What we're looking for, guys, is we're looking for pullbacks against overall trend to look for a V bottom and then look for a strategy entry, meaning a what I call an LG2 entry. It looks for the first liquidity grab after the V bottom. So our dual trend filter is categorized as these outer zones first. These outer zones right here, this outer zone, you see two parallel lines that run next to each other. Looks like a car running through snow right there. Of course, there's not black snow, but anyway, it looks like a parallel line. You see that right there. That is our outer edge zone, trend zone. That has been back tested over the past 30 years as the best zone for trend and to reverse price on the S&P. So that's our first trend zone, okay, our outer edge. And then, so that's the outer edge. And then inside of that is our proprietary Renko bar type we created. And that's our sim bar type. And we use that as a trend filter. So in our software, we show you how to put that on there so you get a what's called a dual trend. You'll get this outer zone that runs parallel to each other, and then you get these inside trend dots, right, on our sim Renko. So when they're both green, meaning you get the outer zone with the inside trend dots, and they're both green, that means you're in total alignment in the market. Your bias is looking to go, you're looking to buy, okay? Looking to buy. So if we're looking to buy, then what we want to do is we want to wait for a retracement. This is a retracement. We want the green, we want red candles to come in, our red Renko sizes, Renko bars to come in and give us a retracement. Once we get a retracement, that's going to set our trade up for two possible setups. One, if it's green, we're looking for a V bottom in the market. We're looking for a V bottom. Now, some of you, yesterday when the market was chopping around in the morning, we were still green, even though we're chopping around. So that told us if we break outside a high value area, this market could get some vertical movement, and we sure did. It broke out, and we went hard to the upside. So when you're green, you look for a V bottom. That's green, you look for a V bottom. Okay, right after the V bottom occurs, I'll go over the zero turn candle in a second. The V bottom over here also. Right after the V bottom occurs, we can use our strategy to toggle on our strategy to manage our entry, our stop, and our targets. It takes the emotion out of trading because the strategy will enter for you. They'll manage the position, they'll manage your entry, your stop, and your exit. So yesterday, if you look at the V bottom, came in, came up, got a retracement. Then we had a V bottom zero turn candle. Now when this occurs, you're looking for a vertical move. So that gave you an indication right there on a when you're green, and you get a zero-turn candle, what's a zero-turn candle? These hammers, when they come up, you see a hammer here, it's like a doji. When they come up on my Rinko size I use in the room, if it turns yellow on the first hammer, or the hammer, that's called a zero-turn candle. We're looking for a vertical move in the market. So traders could anticipate this market going vertical because we had a zero-turn candle that's just about ready to break outside a high-value area. High-value area was just above us. And sure enough, we got the zero-turn candle, and the market started moving higher. Your zero-turn candle, V-bottom. When you see this come up, this is the best time to look for liquidity grab. This is when the software can be turned on, and the entry would have been right at this level on a liquidity grab entry. Targets were hit. V-bottom comes in again. Beautiful thing about this, we broke out a high value area. We retested right exactly on high value area. This one tested on the control point almost to the tick. And we're above the control point. It gave you confluence on the zero turn. This one retested exactly right on our HVA within a couple ticks. It broke out. The market broke out, did a little ABC or a little cup and handle, and started running. So now this V-bottom, we had the retracement that came in. So you got retracement. So then the second thing you look for is use a strategy to get into what? Your LG2 entry. LG2 entry, which is your liquidity grab entry. Your liquidity grab is going to come right after your V-bottom or V-top. So you let the software pull you in on a liquidity grab right after the V-bottom. It'll get long right here, a few candles afterwards, a few candles afterwards. It got long here, a few candles afterwards. It got long here, a few candles afterwards. This one, it never got long at all. It never pulled in. So even though we had a V-bottom up here, liquidity grab software did not pull us in because it never got liquidity grab. So your liquidity grabs are going to come right after the V-bottom, right after the V-bottom, right after the V-bottom, right after the V-bottom. So you're getting a confirmation that the market's in a move. All right. Now, like I said, members, you're going to get this morning on a recap of exactly how to trade the system, right? And then I go over stops, entries, all that stuff. Also go over, a lot of traders want to know about the NASDAQ futures, other markets on larger Rinko sizes. I got that at the bottom of this. You'll be getting that here this morning. So, but that's the method. You want to stick with the dual trend filter. The dual trend filter is going to create the trend for you. So you want to stay on the side of the dual trend filter and then keep it simple. Stay on the side of the dual trend filter. You want to stay on the side. So even yesterday when the market was chopping around, we were green, right? It was ready to break out. And then finally it broke through this high, which was HVA, retested HVA. This is where it retested my price profile. Now check this out. What's cool is yesterday, I want to show you something. How can we use market profile? And I sent this out to you members. So yesterday we were in a chop, selling the high, buying the low, right? Then the market broke out and it hit HVA right on its head, came right back down and retested the control point. The control point, if you're above it, you're bullish. If you're below it, you're bearish. It retested the control point. This is exactly where we had my zero turn candle that came in, right exactly on the retest of the bullish control point. Market comes up, breaks out. Breaks out. Now we're above HVA. Old HVA resistance becomes new HVA support. I'll get this out to you members this morning on my email. Once you break out of HVA, you like to let it retest. This is a break retest of HVA. Guess what happens? We have the V bottom in a green dual trend filter. Dual trend filter was green here. Retested the POC, V bottom. Liquidity grab came right afterwards on the strategy for your entry. We broke out of HVA, retested the HVA, and our V bottom yellow trigger candle entered here. Liquidity grab strategy entered there. Then it broke out of the price profile, retested it, only broke it by a couple ticks, and we got a V bottom that came in, yellow trigger, and our liquidity grab strategy went long there also. So our LG strategy went long here, LG2 went long there, it went long here, went long here. Now, the reason I'm showing you this is market profile shows all the trading participants in the entire world. It looks at all, this is an electronically traded market. It looks at all the hedge funds, prop firms, amateur, professional, banks, whatever it is. It shows exactly where order flow is. This is our roadmap. So when you get these V bottoms and V tops that occur, and they occur retesting one of our profiles, whether it be our control point, our HVA or LVA or our price profile, and you get it showing a V bottom or V top, that's a great time to turn on the liquidity grab trader. And I called it out this morning also, which I'll show you way before it happened. If you guys were in the room, I started looking at these markets at 7 a.m. this morning, Eastern Standard Time, and we had a beautiful zero turn candle that can launch this market and still running right now. And I'll show you that in a second, how I projected that and posted that in the room before it even occurred. And so what I was looking at in the room, the same thing. You know, a zero turn candle, this market could launch itself to the upside. So if I put this beside here, look at the retest here, market profile. That's exactly where we had the V bottom trigger right there. And this is exactly where liquidity grab trader went long. If I look here where it retested HVA, that's where it retested HVA, right at that level, on the control point, I'm sorry, right there at the control. What was that, 59? 59 a quarter. 59 a quarter right there. You see the control point? And the market gets launched again. So you can see where these like to launch at. Oops, which one was that? Yeah, that was the low there was 55, 59, 66. So here was your retest of HVA, V bottom, retest, V bottom, and here's another V bottom that got retested and shot up. Okay, we'll send that out to you members, and you'll have the longer Renko sizes on there also. So that's what we do. We look for an LG2 entry, okay? So if I'm looking at today's action then, what did I post in the room? Let's take a look down here. Let me scroll back up before we say hello to everybody. And what I post right here, look at the bottom under general chat. At 7:20 a.m. this morning, let me put it down. 7:20 a.m. Right there, 7:20 a.m. I posted zero turn candle. Let's see if the ES can break this triple top at HVA and produce an LG2 entry. It sure did. The LG2 entry was at 61.1550. 61.1550, the strategy got long. Right there. So the strategy went long at this candle. 61.1550, it went long right here. And it's got as high as 18.5 so far. Okay? What you're going to do is you can let the strategy manage your entry, your stop, and your targets. Why is that important? Because this trade right now, this V bottom zero turn candle, once this V bottom came in, you can toggle on the strategy and let the strategy do the work for you. Now you're letting the strategy manage the position. It's managing the position for you, and that takes the emotion out of trading. Why is that important? It's very important. It's very, very important because now it's managing the position for me. So now it can manage a position after knowing that we're in a dual trend filter up, we're in a V bottom up, so you can turn on the strategy and let it manage the position. Yesterday, if you did it the same way, the retest here, we had a V bottom, turn it on. Got that nice huge spike. V bottom, turn it on. Got that huge little run. V bottom, turn it on. Got that nice run also. You can let the strategy manage these positions. If not, this is a 5-minute market profile chart. Entering off a 5-minute chart is very hard to manage your stops, manage your targets, manage your exit. I mean, your stops and your entries and everything. So what we can do is we can use market profile in conjunction with our V bottom, V tops, or just use these V bottom, V tops to let the strategy, turn the strategy on, let it manage your position. So right now, we got one target off, two targets off and we're looking for a run in the market. Now, if you look at the bottom in general chat, that's projected at 7:20 this morning. We never got an entry until right after 8 o'clock, about 40 minutes later. This is not a lagging indicator. This is very, very leading. So we have a leading indicator that tells us ahead of time when to toggle the strategy on. The strategy then will watch for the first liquidity grab. This was the first liquidity grab at 7:55 this morning. This is the first liquidity grab after the V bottom, after the zero turn candle. So here's your zero turn candle. The first liquidity grab, where they grabbed liquidity to bring this market higher, was at 7:55.20. The zero turn candle came in at 7:14 to 7:20 this morning. You had almost a 40-minute or 35-minute heads up on this trade. It's a very leading indicator. And we can use a strategy to fire us in the trade. Now, like I said, I did a recap for you members to keep it simple. It's a recap. I go over everything in great, great detail again. I go over larger Renko sizes at the bottom also, so you guys can, if you want to trade off the larger Renko sizes, to help you out, such on the NASDAQ futures and other markets, crude oil and so on. The euro, pound, this works on all markets. The method stays the same, guys. What we're doing is we're letting the dual trend filter to keep our mind right. It keeps us on the right side of the market. That's half the battle. Where traders tend to fail is they try to counter trend trade the market using pivot levels, Fibonacci levels, and all these other indicators that fade the market. Now what's neat is that we have these inner dots, my sim dots. These will tell you the strength of the market. So at 3 o'clock a.m. this morning, if you're a European trader, that told you this market's super strong in the ES. Why? It never closed 2 candles below my inner trend dots. This market's super strong on this zero turn candle. Here and here. Why? Because if price turns when we're inside my proprietary Renko candles, proprietary Renko trend dots. See, here's our big zone that's tested over the last 30 years being the best zone. That's green, telling us to buy. We take it a step further. We have a dual trend zone then, where our proprietary Renko bar type, Sim Renko, told us we're setting higher lows, but we're not breaking these lows. We're not even closing below them. So what does that tell you? It tells you that this market is strong. It's not closing 2 candles below it. This ES is strong. So that is called a V bottom. And then afterwards, a liquidity grab long. So the liquidity grab trader is still trailing this position. I got a break even +1 on this trade right now. So your break even +1, depending on your fill. Fill should have been 15.5 to 15, depending on your fill. Your break even is going to be somewhere 15.5 to 15, right around there. So I got my other targets out above. So if this does not get stopped out, this is where you have an edge over your trading opponents using the LG2 because it takes your emotion out of the trade. Now you just let it do its thing, whether it breaks you even or it runs another 10, 20, 30, 40, 50, 60, 70, 80, 100 ticks, whatever it's going to run. Now you're in the best position to win because you have a break-even +1 trade. My point is, when you get these zero-turn candles, you need to really pay attention if it's green, green, or red, red. Now, if it's green, red, or red, green, you get a zero-turn candle, your target is just the opposite side of my trend filter, which is 4 to 12 ticks. You're not going to get much. But when you are a zero-turn candle and you're red, red, or green, green, like right now in this position that's running, if you get a zero-turn candle, like here, the zero-turn candle, look at the move it started. Look at that move the zero-turn candle started at 11 o'clock yesterday. After Trump got done speaking, guess what we had? After Trump got done speaking, guess what we had? A zero-turn candle. Guess what the liquidity grab trader had? As one of the best liquidity grab trades of the day. When he got done speaking, the market formed a zero-turn candle. The trend filter matched up, and the market proceeded to go vertical. So when you get these, you really need to pay attention. Now here's a zero-turn candle that's chopped. This is different. If you get one in chop, the maximum you're looking for is this other side of profile. I mean, other side of trend candle. Let me show you another one. Right here. So zero turn and chop is different than green, green, or red, red. Your target's here. Majority contracts should be taken off there. It's 12 ticks, 58.25 up to 62. But when you are zero turn red, red, or green, green here, this is when you want the market to go vertical. Look at this, zero turn. That means it's right on the hammer. Market goes vertical. 54.25, 67, over almost 13 to 14 points move, and this is right after the London Open, which usually gets a nice movement. Another zero turn candle. Look at the zero turn. How it launches this market. Zero turn candle. Look at the launch you get. Liquidity grab trader here. Liquidity grab trader here. V bottom. Liquidity grab trader here. Worked. Liquidity grab trader here worked. So you're getting a liquidity grab trader that happens right afterwards. So you see my point when these zero turns come in. You see why I posted that in the room this morning at 7:20. I'm anticipating this to run. I'm anticipating this liquidity grab trader to keep going. I'm anticipating this guy to keep hitting targets. Why? Because I got a zero turn candle that's green, green. If traders just wanted to wait with my software for zero turn candles and only trade those with liquidity grab trader and V bottom, V tops, that could be a methodology you use, just that alone, and let the software manage your entries and your stops and your targets. Right now, it's in a zero turn that I projected at 7:20 this morning. I posted right in the room. 8:09, I said LG2 running. It got filled. If your own members out there, you should get it filled at 15.5, 15 to 15.5. But what do you do right now? You don't do anything. You let the strategy manage your position. let it manage your position right now. This could hit target 3, target 4, target 5, target 6. And if it doesn't, you're out of break even plus 1. The risk you take, guys, is getting to target 1. That's a risk you're taking. After target 1's hit, you're break even plus 1. So the market risk that you take with this, why would you get out of your entire position right here? You don't. You want to hold this runners and as long as you can, as long as your targets are out. And you can position your targets depending on your risk tolerance. I mean, I've got 20, 30, 40 tick, 50 tick targets on this thing. As long as I don't come back down and hit 15.5, then this thing will just keep running. All right, so members, look for this right here. Look for this. This recaps a PDF. We have a PDF that goes over this in detail. I go over this in detail with you also. And I have, like I said, at the bottom of this, we have charts. I have some longer Renko sizes that some of you traders wanted to, on other markets, want to look at. I put that in for you. But listen, before I shut this off, keep it simple. Just keep it simple. This is a very, very leading indicator software. This is not after the fact. These do not repaint. A lot of indicators repaint. We're not fading the market. We're not going against the market trend. If you pull up any NinjaTrader, TradeStation, Thinkorswim, all these indicators, they're designed for us to lose. Why? Because they counter-trend trade the market. All these oscillators are designed for us to lose. Why? Because it counter-trend trades the market. This dual trend filter gets your mind right. It keeps you on the right side of the market. And then, not to mention, it lets you know when the market's super strong. If I'm above both trend filters and price reversing on both trend filters, this market wants to go vertical. Even if it gets into my deep zone that's been back tested for 30 years, it still hasn't trend changed. I don't got to worry about a trend change, guys, until I start closing 2 candles outside of my zone, my outer zone. I don't worry about trend change. I don't worry about shifting gears until I close 2 candles outside of my outer zone. That keeps your mind right. It keeps your mind right in trading. The bias has been up, only V bottoms. Since when? It's been all buys. Look at this, all buys. If you took one sell in the market, you took one short in the market since 10:30 yesterday, you're totally going against market trend. If you took one short, one, against the market, look at your trade blotter. I don't care if it's with market profile. I don't care what it is. If you took one short against the market, then you're going against this trend filter. This trend filter is very, very powerful because what it does, it keeps us on the right side of the push. There should be 0 shorts since 10:30 yesterday, and it's 8:45 this morning. That's a difference from fading the trend and buying the retracements on the trend. These are retracements, retracement trend, retracement, all the way up. So then we can use the liquidity grab trader to fire in the trade and then manage our positions. And then the downside would be the opposite way. The downside is just the opposite, guys. It's not hard. The downside would be here. If it's red, you only short. That's it. So what we're going to do, we're going to look for V tops for yellow trigger to fire in, and guess what? Turn liquidity grab trader on there. V top, liquidity grab trader gets the run, right? And if it's green, what do? Very simple, only buys. Liquidity grab trader there with the V bottom. Liquidity grab trader 2 here with the V bottom. Is this market showing strength? Oh yeah. Oh yeah, it is. Oh yeah, why? Look at my inner dots. My inner dots show me one thing. Don't make this difficult. 0 turn candle fires on my inner dots. This one produced a nice run. Here's liquidity grab trader strategy. Gets it. Gets that one. Gets that move. Gets that move. And it's all buy bias. Where you don't want to turn on the liquidity grab trader, which you don't have to do, is what? You don't have to turn it on in when it's green, red, or red, green. We don't have to do that then, do we? Why? Because it's a chop market. Look what the market does. It has a zero-turn candle up here. What's it do? You know that the largest potential you can get potentially is on the other side of my trend dots down here for 12 ticks. We don't got a lot, but if a zero-turn candle comes here, heads up, look for a movement. That's why I posted at 7:20 this morning. Get ready. Get ready for it to break. Sure enough, we got a runner right now on Liquidity Grab Trader right there. Runner's still running. It's still intact. Why? Green, green. V bottom, Liquidity Grab Trader. Do not make it any more difficult than that. If you're chop, don't trade it unless you're looking for 4 to 12 ticks. If it's trend, green, green, red, red, look for a runner. Look for a V bottom, V top to come in, and look for that runner to run. If it's red or green, stand aside, and it's as simple as that. Let the algorithm do the work for you. Right now, we are running. Right now, we are running. Right now, Liquidity Grab Trader is running. Why sell the position? Why get out? Why? Because you have break even +1. What happens? Zero-turn candle came in there. Remember, the Liquidity Grab Trader, when is the best time to turn a Liquidity Grab Trader? Let's say this before we turn this off. Let's make this very, very, very clear. The best time to turn on Liquidity Grab Trader to manage your entry, stop, and targets. The best time to turn the Liquidity Grab Trader on. 2 scenarios. First, it cannot go against dual trend filter. It's got to be green, green, or red, red. That's Captain Obvious that I go over every single day. Tons of videos over and over and over and over again. It's got to be green, green, or red, red, or you don't trade it unless you have a zero turn in a chop, which is green, red, red, green. You better scalp it for 4 ticks. Now, does it scalp for 4 ticks a lot? Yeah, because you get that reversal, right? But if you're not looking to scalp and you're looking for big trend moves, you got to wait for green, green, red, red. Secondly, look at the inner trend dots. Look how it's reversing price this morning. Why was I excited? And I put that at 7:20 right there. Look at the general chat. Zero-turn candle. Let's see if this ES can break this triple top and produce an LG2 entry. Sure did, right there. Got us in at 15.50. Still running. Still break even +1. This market can go vertical and hit the 20, 30, 40 tick targets. It can still hit them. We don't have news today, but let it manage the position. My point is, look where these are at. Look where the turn happened. The turn happened above my sweet spot trade. So not only do you get red, red, or green, green to get your mind right on trading the right direction, and you got the zero candles to let you know when this market could launch, now you know if the market is strong or the market is weak. I call this gauging the temperature of the market. I can know the temperature of the market if either it's hot or it's cold. A lot of stock traders, what they do is they'll put all the pharmaceuticals together on a map. And if they're all red, they're selling the pharmaceuticals off. Or they'll put all the semiconductors together in a map. Or they'll put NVIDIA and all the artificial intelligence stocks on a roadmap, on a map. And if they're all red, the sector's selling off. The same thing is here. Is it if you can tell if the temperature is hot or not in that particular market. If my dual trend filter is green, green, and it's not closing below my inner dots, the market temperature is red, red, red hot. What does that produce? Runners on Liquidity Grab Trader. That's when you want to go to work and let it run. Let it hit your targets. Sit back. If you see these, if you see a zero-turn candle that's green, green, you better be looking to turn the Liquidity Grab Trader on a zero-turn candle when it's green, green, especially if it's above my sweet spot trade. That's the best trade you can get in my trading room. You can't get any better trade than that. There's no other trade you can get better, or no other trade where to turn the Liquidity Grab Trader on. There's no other V bottom, V top that can produce a better trade than that. Why? Because it's a shallow retracement with overall trend direction. Trend is up. It's a shallow retracement with overall trend direction that can produce a big vertical move. You got to remember the markets can only do 2 things. Either they're going to go vertical or they're going to go sideways. It's not hard. Either we're in a chop market or we're going vertical. That's it. Well, if we're going vertical, it's going to be green, green. Or red, red. If it's chop, it's going to be green, red. That means there's a transition to either go back to an uptrend or a downtrend. And that's what you want to do. You want to keep your mind right. So right now, the liquidity grab trader is what? Sit with it. Why would you turn it off? Why would you get out of your position? You're in a best possible chance to succeed. Why? I'm at a, right now in the market with the S&P, it's slow, real slow right now. But there's no news today, so it's kind of slow, but it's a good time to really understand how this works. The market pulled back and stayed above my inner trend dots. This market can go fast and hit my targets immediately, just like that. We're probably going to see that happen because it's a zero-turn candle. We're probably going to see target 3, target 4, target 5 hit. Why? It's a zero-turn candle. And we're above my sweet spot trade. We're in the best possible chance for a runner. Okay? That's how you want to trade the system. You can use the dual trend filter to get your mind right in the right direction. Remember, all these indicators, 99.9% of the indicators, to me, in my opinion, are worthless. Why? Because they're all counter-trend trade. All these oscillators, when this oscillator is overbought, I want it overbought. Traders like, it's overbought. It can't go higher. Yes, it can. We're totally opposite of what the public does. We buy high, sell higher, short low, cover lower. We're buying high here on this V bottom in liquidity grab and selling higher. We're buying high and sell higher. Well, the public, well, there's a Fibonacci up here, or there's a S2, or there's a pivot level up here, or this is a triple top, or no. Indicators will get ran over. Oscillators will get ran over. The reason this works so well with the dual trend filter, it's a self-generating trade. It preys on order flow. Because guess where the resting stops are on all these pivot levels? Resting stops are just above here, just above here, just above here, just above here, then the market takes off. That's order flow. That's why V bottoms work so well with the dual trend filter of V tops, because it's catching all the rolling position traders. It's using all these different indicators to fade the market. Or they're using divergence to fade the market. It's hitting a 1.618 retracement, and it's got triple divergence. Sell it. Nope. It's going to pull back a little bit. And it's going to jet right through it, because that's how they create order flow. They pull it back. They jet it right through it. Right? So it's a matter of, keep it simple like that, guys. Very simple. And I've sent this out to you. This is in the PDF also. Just keep it simple. On a chop market, 4 to 12 ticks. On trend, you're looking for a runner to run, especially zero-turn candles. I go over that directly in this email I'm sending out to you guys. It's in the PDF also on the members download page. But I recapped everything for you. And we got some longer Renko sizes below. I know some of you wanted some Renko sizes to look at on the NASDAQ futures, so I put that in there for you. All right, but let's keep our mind right. Let's keep our mind right on the side of the market of the trend. Right now, the runner is running. Let it run. Look at that. These are all buys. These are all buys. All V bottom buys. All the way up. No sells. There's no sells on the trade blotter. None. Zero. Look at that zero-turn candle there that happened at the close yesterday. Beautiful. These are all with trend. All of them, all the way up. All right? And if they're inside the inner dots here, then what do you got? You got a possible run. So we got a possible big runner coming. I mean, this strategy, liquidity grab LG2, I love the LG2, guys, because it takes the first liquidity grab after the V bottom, right? So I anticipate this hitting our targets. I anticipate this to keep going. And if it doesn't, comes down to breaking +1, we'll wait for the next V bottom, V top with the overall trend, and we'll wait to fire in that trade. But this is why, since this video, there we go. Now we're starting to move. Now we're starting to move a little bit. I know there's no news today. Starting to move. This is why the LG2 strategy, you have the edge over your trading opponents. Why? It takes the emotion out of trading. It takes the total emotion. Why? Because you're break even +1. Why would you sell your position? You had a 0 turn candle inside of my inner trend dots. That's a sweet spot trade. This market could hit our targets just like that. All of them. Right? So that's the key. The key is sticking on the side of the trend with a dual trend filter, looking for a V bottom, V top, and then simply turning the liquidity grab trader, let it manage your entry, stop, and exit. And I go over that with all you guys members in the PDF under the members download page. And then also I'll get this email out to you guys here this morning with Gerald to recap that also.